Welcome back to Market Meridian Finance channel. Today, I will tell you all about QQQ. If you've been investing in US markets for any amount of time, you've almost certainly heard of QQQ. It's one of the most traded ETFs in the world. For millions of investors, QQQ isn't just a fund, it's the single easiest way to bet on the future of technology, innovation, and global economic leadership. But here's what most people get wrong. QQQ looks like a one-way ticket to long-term wealth, but it has crashed over 80% before. It can take more than a decade to recover from a bad entry point. Today, we're going to cover the full story of QQQ. Where it came from. How it works. Its biggest crashes and greatest comebacks. Whether it still makes sense in 2026 and beyond. Exactly how you should use it in your portfolio. By the end of this video, you'll understand QQQ better than 99% of investors. Let's begin. Chapter 1. What is QQQ exactly? First, let's define what QQQ actually is. QQQ is an ETF that tracks the Nasdaq 100 index. That index includes 100 of the largest non-financial companies listed on the Nasdaq Stock Exchange. Important. No banks. No insurance companies. Purely large-cap growth, innovation, and technology. So QQQ gives you exposure to companies like Apple, Microsoft, Nvidia, Amazon, Meta, Google, Tesla, and many other leading tech, biotech, and consumer discretionary firms. This is not a diversified index across all sectors. This is a concentrated bet on innovation and growth. QQQ launched in 1999, right before the dot-com bubble. That launch timing shaped its entire reputation: extreme upside, extreme volatility. Let's summarize. QQQ equals Invesco Nasdaq 100 ETF. Tracks 100 largest non-financial Nasdaq stocks. Heavy in tech, communication, consumer discretionary. Extremely liquid, very low expense ratio. One of the most traded ETFs on the planet. Now you understand what it is. Let's go through its wild history. Chapter 2. The Darkest Days, dot-com Bust. If you want to own QQQ long-term, you must understand its worst period. QQQ launched in 1999, at the peak of the internet bubble. Everyone thought tech stocks would go up forever. Then the bubble burst. From peak to trough, QQQ crashed more than 80%. Let that sink in. If you invested $10,000 at the top, you ended up with less than $2,000. Worse still, it took about 15 years to fully recover. That's the danger of buying any asset when it's extremely overvalued. But here's what most people miss. The QQQ of 1999 is not the QQQ of today. Back then, it was full of unprofitable internet companies with no revenue, no business model, no path to profitability. Today's QQQ is dominated by highly profitable companies, massive free cash flow, real products, real users, real moats. That's a critical difference. The dot-com crash was a lesson in speculation. Modern QQQ is backed by real earnings power. Chapter 3. Recovery, Rebuilding, and New Bull Markets. After the dot-com crash, QQQ slowly recovered. Then came the 2008 financial crisis. Even though it was tech-heavy, QQQ still dropped roughly 40%. In a full liquidity crisis, everything sells off. But then, a new era began. Smartphones, cloud computing, social media, e-commerce. The companies that dominate QQQ today started to take over the world. Apple launched the iPhone. Amazon scaled AWS. Microsoft rebuilt itself under Satya Nadella. Google dominated search and advertising. Meta created social media at scale. QQQ transformed from a speculative tech bubble fund into a portfolio of the most dominant companies on Earth. By the 2010s, QQQ was outperforming the S&P 500 consistently. Then came 2020. Chapter 4: The COVID Era and AI Revolution. In 2020, COVID hit. QQQ crashed till 30% in weeks, then exploded higher. Digital transformation became urgent for every company. Tech became the safe haven. Then 2022, interest rates skyrocketed to fight inflation. Growth stocks got crushed. QQQ fell roughly 33%. But then came the AI boom starting in 2023. Nvidia and AI-related mega caps took QQQ to new all-time highs. By 2026, QQQ is more powerful than ever. But it also faces real questions. Is it overconcentrated? Is AI already priced in? Can it keep growing at this rate? How will high interest rates affect it? Let's move to the present day. Chapter 5: QQQ in 2026, Strengths and Weaknesses. Let's be balanced. Strengths. 1. Automatic survival of the fittest. The Nasdaq 100 rebalances quarterly. It kicks out weak companies and adds new leaders. You don't have to pick winners, the index does it for you. 2. Profitability and cash flow. Today's top holdings are massively profitable. Not like 1999. 3. Innovation leadership. AI, cloud, semiconductors, software, biotech, QQQ owns the leaders. 4. Long-term outperformance. Over 10, 20, 30 years, QQQ has beaten the S&P 500 convincingly. Weaknesses. 1. Extreme concentration. A small number of megacap stocks drive most returns. If they struggle, QQQ struggles. 2. No financial sector diversification. When financials outperform, QQQ gets left behind. 3. Very high volatility. Expect 30% plus drawdowns in bear markets. 4. Almost no dividend. Not designed for income investors. 5. Sensitive to interest rates. Higher rates for longer equals pressure on valuations. This is why QQQ is not a set it and forget it forever low-risk investment. It's a high-potential, high-volatility asset. Chapter 6: The Future of QQQ, Can it continue dominating? Now the big question. Will QQQ keep outperforming over the next 10 to 20 years? Let's be realistic. Tailwinds. AI is still early. Cloud computing growth continues. Automation, robotics, software eating the world. Moore's law and computing power keep improving. These companies have unbeatable moats: data, brand, scale, network effects. Risks. Valuation is high in 2026. Potential antitrust regulation. Geopolitical tensions. New competition from China or other regions. A new crisis that crashes growth stocks. My view. QQQ will likely continue to outperform the broad market over the long term, but with more volatile periods. You will get higher returns, but you must tolerate deep drawdowns. Chapter 7: Exactly how to invest in QQQ. Let's end with actionable strategy. Who should own QQQ? Long-term investors, 10 plus years. People who can handle 30% plus drops. Investors who want growth, not dividends. Who should avoid QQQ? Retirees needing stable income. Investors who panic sell during corrections. My recommended strategy. 1. DCA, dollar cost averaging. The single best strategy for most people. 2. Add more during corrections. 10 to 15% pullback, small add. 20% plus pullback, strong add. 3. Don't go all in. Aim for 30 to 50% of your equity portfolio in QQQ. The rest in broader markets, value, dividends, or bonds. 4. Hold for a minimum of 5 years. Ideally 10 plus years. QQQ rewards patience and discipline. It punishes speculation and emotional decisions. Conclusion. QQQ is not just an ETF. It's a bet on human innovation, technology, and global leadership. It has a brutal past, a dominant present, and a promising but volatile future. If you understand the risks, control your emotions, and invest for the long term, QQQ can be the single best engine for wealth creation in your portfolio. If you want more videos like this, deep dives into ETFs, investing strategy, and long-term wealth, drop a like, subscribe, and comment below. Are you investing in QQQ in 2026? Thanks for watching. Please subscribe Market Meridian Finance channel. And I'll see you in the next one.